All right. So in this video, I'm going to explain EurAud on the 4-hour time frame, explaining why it bought up for 130 pips from around, I'll say, 7 o'clock p.m. until current time, which is now 1:39 a.m. on the Eastern time zone. Okay, and it is July 21st now, but from July 20th to July 21st on the EurAud 4-hour time frame, we're going to explain why it bought up. So I'm going to screen share now. All right. So this is the 4-hour time frame in the EurAud. Using my strategy step by step, I'm going to carefully explain what I'm using and why I'm using it. All right. First thing, what I look for is you see my high, my low, my higher low, and my lower low. In other words, when you hear me say stop and reverse, market comes up, stop, reverse, market comes down, stop, reverse, market comes up, stop, reverse, market comes back down, stop, and reverse. All right. So off the bat, I'm saying the market is in a potential form of a W. So a W we also know is a setup for a bearish overall movement. Now, from this high, I'm going to mark off automatically as we see from June the 1st of 2017, the market created a high right here. The market pushed down and right around the 20th of June 2017, the market created a low and pushed back up to the high, creating a higher low 7. And now the market created its lowest low around the 20th of this month, which was yesterday. Now, this is where we're currently at. On 6 o'clock, 7 o'clock Eastern time, the market is right around here. On up, I'm going to explain why the market has bought up. Really, really simple. For about almost 130 pips. And earlier, if anybody has received my signal, that would have been a perfect time and you would have banked over 130 pips. Depending on the lot size, you would have made some nice profit. But overall, I want to see this right here. I'm seeing that the market is coming from this high to this low, which is this X to this B. I mean, this X to this A. And I want to get a measurement of the pullback of B, which is right here. So I'm going to take my swing high from the tip of the wick, low. And the market is giving me a retracement almost close to the 786 retracement. Now, anywhere we know if you see that and you have an extension past 0.0, which is your first low, and the market is past that, creating an extension leg, that is automatically giving you an anti-Gartley harmonic pattern. And we see the market came down and hitting around the negative 0.27. In other words, that's the 127 extension. Now, we're seeing that we know the completion of that will be a 127 up here. Some ways to go, about another 680 pips. And that would be a full completion of an anti-Gartley pattern. Now, why did I know that this was going to buy up? Now, let's backtrack a little bit. Let's mark off our highs and our lows, our supports and resistance. So I'm going to the tip of this wick, marking off that high. Now, from this high, the market has created a low all the way down, very first low. But when you look left to that very first low, which is right here, doji that happened right here with a continuation of an uptrend because it closed higher than the high of that doji. The most previous high would be, which this would explain why there's a gap between these two bulls high, and the market came back to retest but never closed below this gap, which is your true and support, turned into a support, now resistance, respectable line. All right, down here, this is my first low, first major low. And from there, there's a high that created here at the opening of this candle. So when you look left all the way, you will see the very first low before any rejections and breakdowns you see. Lows happen here. This low will explain why this happened here. Okay? Now, the market was currently here around 6 o'clock p.m. Eastern time. Now, I made a statement in the group that it needed to close above 1.4620 in order to show that the market is going to continue in an uptrend. By 120, by 4620 would be breaking this first low. If there was a rejection around 6, 7 o'clock, and which would be around 9 o'clock p.m., which would be an opening of new candle, which is right here, 9 o'clock p.m., if this was still closing below 1.4620, the market was then going to keep pushing down into at least the 114 or 1618 and keep pushing further down to find a new lowest low. But therefore, the market has closed above 1.4620, which is above this first low. And as you can see, the market came and closed within this zone and above 1.4620, closing above here, which gave all momentum that the market is going to continue pushing up. Now, let's just break this down some more. I'm going to go ahead and mark off my zone down here. So this is the low here. And by that first low I'm looking at, I'm seeing here we have dojis here. And the first low happened here. The body closed of this doji, the body closed above this line. There you go. Now, the market came in here. All right. So I'm going to go ahead and get a measurement and measure this. Market came from this X to this A to this B, almost hitting the 382 with an extension of a 1414. 382, 1414. I see overall the market has closed above 1.4620, which is closing above this low right here, inside of a demand zone, which is now turned into supply. And then I'm seeing, okay, I got this closing here, but then I also take a measurement of this pattern, and I'm recognizing the market coming to a 382 with an extension of a 1414, knowing that markets are very common to form a harmonic pattern of a cipher. So therefore, the completion of a cipher is what? X to D range of a 786. 125 pips or 130 pips. Hitting the 88 on 786. Full completion of a cipher, a bearish cipher. And remember me always saying that the market is going to come back and retest what it previously. Therefore, the market will come back down to retest here. Because when you look left, market has broke B in order for the market to reach D. Trend reversal of an uptrend. Little quick video to explain why EurAud rallied up for 130 pips. All right.